Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, June 14th, 2023. It's 2:19 p.m. Eastern Time, so we now have the FOMC rate decision out of the way along with their brief statement. The gist of it is they, as expected, didn't hike, and they came out with some pretty strong rhetoric. You know, the Fed always tends to jawbone the market up down. But we'll see. Powell's going to come on. I'm doing this video. It's going to be, roll into the press conference, which starts in 11 minutes from now at 2:30. But I wanted to share my thoughts. This is when, when there's volatility, that's when traders can make some money. And, I've said it once, I've said it 1,000 times lately. You always have the increased chance of whipsaws. But so far, here's the initial reaction. And you never got that usual spike back up. I don't want to read too much into this, but here's what I wanted to say. I wanted to get this out to you that we broke down. This is, remember, when I say sell signal 1 today, I want to make clear this is where the official short trade is right there. We shorted right there before the breakdown. You had a support level broken. That was an additional sell signal. We had resistance here. So again, whether you're even short, whether you're long, that it gets almost impossible to track multiple entries. That's how I trade. I point out objective entries, objective add-ons to long trades, short trades. Whether I already have a full allotment or not, I'm taking those. But I'll share my thoughts as what I always do. I like it. I like based on what I heard, but more so the technicals. Again, where we're at leading up to this, and sentiment as well too. Get some pretty rabid bulls starting to come out of the woodwork lately. I think it's a good shot. And I had a line there the other day. I don't know where it went. Maybe that was on the futures. We had a little resistance there. So either way, that's a sell signal. Take it for what it's worth. And here's the thing. Okay, is it Fed post FOMC? Yes. Is whatever Powell says over the next hour have the potential to change this? Absolutely. So let's just talk about this. As if you were, tracking these sell signals I laid out in the last 2 days, today and yesterday. Sell signal 1 on the break of the bullish, bearish rising wedge. Sell signal 2 if and when we take out that 357-ish resistance, and then 3 would be all the way down here, that T2 level, and then that's still the final target for what's an official trade, or if you didn't take that and you took it here. So whatever, that's where we're looking at. And again, this is important based on the long-term charts. Sometimes the little things, you're seeming, I think it were even comments, why even bothering with a 5%, which is now a 6%, 7% pullback trade. But still, we'll go from there, whatever you want to call it, 5%. If we get down here, then what's happened is, remember I said earlier today, we only have to drop about 5%. But we also have to close the month down in the S&P about 5%, and the Wilshire a little about that to keep those long-term trend indicators on a sell signal. So, a seemingly short-term pullback trade or seemingly mild correction. Even a lot of the bulls acknowledge, hey, okay, this has gotten a little frothy. We need at least a correction. I want to buy a dip, looking for a pullback. But if that happens, that has the potential to change or at least reaffirm some of the things on the longer term charts. So keep that in mind. And again, I hope I made that clear. We don't just have to drop 5% in the S&P. We have to close the month down 5% or more in the S&P. And if the NASDAQ hits this, I promise you that's a 6.5% drop. The S&P is probably going to drop that much, give or take. So that's that. And then just keep that in mind, because I will most likely, because of that, be adding additional targets if and when we get here, and if and when it looks like we're going to close there at the end of the month. I mean, this could happen in the next couple of days. This market's so full of so much hot air, it wouldn't surprise me to see us be here by tomorrow, T3. And then, support, it's a good level. There's a big thin zone down here. You can see it with the volume price histogram bars. So again, if we bounce, we drop that 6-7%, but we do it in 2 days or a week, and then we're back up here by June 30th. It's not going to help it's going to help flip those long-term trend indicators to bullish. So keep that in mind. So again, don't have to just drop 5%. We have to close the month down 5% or more, as per my comments in the earlier video today. So that's it. I think this is an objective short entry add-on, whatever you want to call it. Is it an all-in moment? No, because it's Fed Day and because Powell hasn't even come out and done his press conference yet. But certainly, starter position, whether that's a quarter, half, not your whole account, just whatever you want to put in the queues. And, stack on as we go down, 60-minute charts. So looking at the trend line. What else I want to show? Oh, yeah, and the VIX. If this, the VIX is at really low levels. So you've got, the thing about the VIX is it's like trading futures or options. Let's say naked puts and calls instead of trading QQQ, just trading naked options. That you're not hedged. Long options. It's the leverage factor. So in other words, if you call a correction right on QQQ, especially the big ones, sometimes the market will have pullbacks and the VIX doesn't respond. But if you get a 6% drop, the VIX is probably going to go up 2, 3 times that, maybe 4 times that. It's at very low levels. And if you really get some traction, again, my thoughts. I'm wavered. We're talking, I said earlier, if I was 50% downside in the S&P, that's above now. When I was back here, that's where I was 30% on QQQ downside to my next target, but we went up another 16%. So that puts QQQ, there's my long-term trend line, and that T4 right there, 235-ish. So that, let me measure it for you. So now that's 35%, but I may very well add to that. I'll be looking at all the indexes. I may have additional targets. And if you start to snowball down, that's where the VIX could really take off. So, all right, I don't want to get too far ahead of myself. I wanted to do that update, and I want to show you one more thing I didn't show you earlier today. So throughout silver and gold as a trade idea, really silver was the one I picked, and it went up, hit that target there, divergent low, that 22.55 target. And initially it was here on the breakout here, this downtrend line off that divergent low. And silver, these are silver futures, SI. T1 hit, T2 hit, T3 hit. And we're walking up this trend line, and we're on it right now. But now let's talk about likely scenarios going forward. And there's 3 things we're going to talk on. Silver, again, I often just trade it in lieu of gold because you get more bang for your buck. It's just like the analogy I would use. It's like trading if you're trading the market, the stock market, U.S. stock market, you can trade SPY and you're going to have muddled results because it's so diversified. You have steady Eddie dividend stocks, utility, defensive issues, everything in there. Or you can trade QQQ, which is all juiced up on 50% tech stocks, so it has a higher beta. They both move in the same direction, but QQQ rises and falls more. Trading silver or GDX in lieu of gold is the same thing. So if you get the call right on gold, you're just going to get more bang for your buck, and it cuts both ways too. If you're wrong, you're going to lose more. But as you guys know, I always trade. First and foremost, I like to keep an eye on the euro and US dollar because gold moves inversely to the US dollar, which means it moves positively correlated to the euro. So here we are on the euro. Today, I didn't have time in the last video. I told you this was a pretty decent resistance level. I was bullish in long silver because of this breakout in the euro. This is a 60-minute chart. I know I'm talking fast. Just want to get everything out. I wouldn't mind hearing the press conference, which is about to start. Breakout, hit a resistance back test. And that's where when silver broke out. Now silver just hit, again, these levels down here, 109.22. Perfect rally into resistance. There's an uptrend line we're coming on just like on silver. We also put in some divergence there. Here's the thing, the Fed, and Powell's going to speak, they came out pretty, again, in rhetoric. They didn't raise, and the Fed will always, they say one thing and then they do another. The one thing I promise you about the Fed, they're always behind the curve and they're reactive, never proactive. So take that for what it's worth. So whatever they say, I don't even, it's in one ear and out the other, but the market reacts to it. So therefore, it's real. I give them zero credibility. Really don't think they know what they're doing, the whole lot of them. But that's it. We ran into resistance. And now if we break that, let me show you a bigger picture and a couple other things. And I think you'll find some value in this. Again, these are all things I cover over time, but you got to loop back to them and update. So let's talk about the euro and US dollar. And so there's the, here it is on the euro US dollar on the 60-minute time. I was just showing you E7, the euro future 60-minute time frame. Here it is on the daily. There was that breakout, the reason to go long silver and gold. Daily chart. Let's go to the bigger picture. back here. And that's where we, shorted. I got bearish on gold because of this. We had a bearish rising wedge right there. You had a very clean uptrend line. There's your bearish rising wedge, divergent high. You broke down. There was your sell signal. You went down here and you hit this about 10, hit that support level / target right there. Bounced. Now, the $1 million question, is that it? I will tell you, I'm leaning towards, at this point now, quite likely no. We may get another leg down. That may be a bear flag continuation pattern. If when you look at the scope of this, you can see that negative divergence and the uptrend line. There's your measured target. Let me just play around with that real quick. Oh no, I already have one there. There's that purple line, create parallel line. I showed you this in the last video. Add it to, there's your measured target right there. It takes me to my 104,738 support, give or take. Maybe a little bit above that. I'm gonna make it a zone right now. Here, I'll zoom in so you can see what I'm doing on the video. You've got a bunch of reactions right there. So here's my target zone. So again, today can change things after parallel talks, but I'm leaning this way. What's going to cause it? Well, one thing, if you break this uptrend line, you certainly break the lows. That's a very decent possibility. And here's a weekly chart of the euro US dollar pair. This was major long-term support right here, a zone, then purple. We took it out. That was a bear trap, so that should be longer-term bullish. However, we put in on the weekly here, we had negative divergence at that high. That's the same wedge I just showed you. We're just looking at now on a weekly chart. So there's that wedge. There's the breakdown. And just eyeballing this pattern, the scope of this wedge and the divergence and that initial leg down. Usually corrective waves happen in at least an ABC, a three-wave pattern. And so far you just have one leg down, one counter trend rally, and again that can bring us down here, and it could still be longer term bullish. We just come in and back test that support zone. So I'm just giving you this kind of in real time, and this could change today after Powell says some stuff and boom, the dollar and euro does one thing. But let me take it home and show you one more thing here. Okay, something else I've covered many times. The euro and the US dollar, the euro in the US stock market. Remember, I'm just using euro-US dollar pair, which is effectively the euro. You're looking at the euro. If this green line goes up, the white line goes up, the euro is going up. That's the white line, the euro. And the green line's the US stock market. Over time, sometimes they have an on and off correlation, but let's not talk about 15 years. Right now, since this bear market started, you can see the year break lines down at the bottom. Here's the 2021, right? That's where, or here's 2022. This is when the NASDAQ peaked right here in November, somewhere in there, and the S&P right there. And even leading up to that, you can see, I believe you can see, a pretty decent correlation. Here you had a negative or an inverse correlation between the stock market, again in green, the S&P 500, and the NASDAQ, and the euro. But then at this point in 2020, when COVID hit, that's really when things kind of change. And and I did update this not too long ago, a couple weeks back. There's been a very, very strong positive correlation. Even the little zigs and zags, and you look at the counter trend rallies. Again, these lines aren't going to overlap because they're priced on different axes. They're different prices. The S&P 500, in percentage terms, the stock market or stocks move a lot more up and down than currencies. Currencies move in pips. They measure it out to the 5th decimal. And so the moves are smaller. So you look at the trend and you can see, they both were rallying. After COVID, the stock market rallied. Okay, third time's a charm. Here's my line. Stock market peaked right here, the S&P 500. Here, for kicks and giggles, I'll throw on the NASDAQ for you as well. QQQ in purple. QQQ peaked technically a hair earlier. And then you can see that stocks were falling while the euro was falling, right? That means the dollar was rallying. They all bottomed right here, and they've all been moving up. So this is something I pointed out a few weeks ago. Let me turn off that QQQ. Just too busy. Let's just look at the S&P. There was this divergence right here. You can see that they've been nearly perfectly correlated, but then all of a sudden the euro started to correct. That's why we were, until recently, we were short gold, and then we went long gold, silver, because it's almost perfectly correlated. That correlation is nearly immutable. You can go back, and I encourage you to go back 20, 30 years. And again, I've always said it's not rocket science. It's because gold, the gold you and I are trading, gold futures, gold bullion, GLD in the US. If elsewhere, trade it in your own currency. But when you're trading gold in US dollars, a falling dollar, a weaker dollar takes more dollars to buy 1 ounce of gold if you hold supply and demand constant. And if the dollar is moving up and increase in value, it takes fewer dollars. That's why you have an inverse relationship in gold, and it's nearly immutable. There's only times of extreme demand or supply, selling or buying pressure that can overwhelm that mathematical constant, if you will. So now on the stock market, it's kind of an on-off thing. However, we must recognize, at least for a while, it's been a very positive correlation to the euro. That's why I'm sitting here talking about the euro, and most of you are probably saying, Randy, I don't give two flips about the euro. I live in Kansas, and I trade S&P 500 futures. Well, this is why you might want to do that, and as well as that gold silver trade. So if my analysis I just showed you proves to be correct, we get another leg down the euro, which is another thrust up in the dollar, because Powell's talking jawboning, being hawkish right now and rhetoric, then what one would expect is the euro would rise as the dollar falls, and gold and silver, I'm sorry, no, I said that completely wrong. The euro would go down, is what I said, and then that should bring both the stock market as well as gold and silver down, quote unquote should. So that doesn't have to happen. I just gave you levels, some support levels, that near-term uptrend line on the euro, E7 euro futures, EUR USD. You can put a US dollar futures, DX, or the dollar futures for US dollar index. UUP is a US dollar ETF, or you can look at UDN, the inverse ETF. So that's it. I wanted to get that out to you. And as of now, that's my thoughts. But let's see let's see how the market reacts to what Powell's saying. And then, if all this fits in together, we're looking at another leg down the euro, which would be a leg down in the stock market, and also quite likely a leg down in gold and silver. And there are times where that relationship between the currencies, there's a disconnect, and one of those times is if there's a strong demand for gold, such as a flight to safety bid. Bitcoin's broken. It's not I showed you the other day, you might want to cover it, its support and all that, but it's not been that flight to safety bid. Gold kind of regained its title over the last year or so, it appears. All right, I'm going to keep this one short. And like I said, that post I just fired off to you right before this video, your next objective short entries, that sell signal, take it with a grain of salt, pass on it if you don't want to trade on Fed day. I wouldn't blame you. But a back test, and the back test of the trend line could occur here. Here's your uptrend line. Could occur here. That would also be an objective short. What wouldn't be is if you take out the trend line, you take out the highs. You'll still have divergence, but you got to decide, if you shorted here, whether you shorted here, whether you shorted here, combination thereof, where your stop is, or even if you're trading on a Fed day. You might want to wait till the noise out of the way. But this right now, we're close, and there's that we're at resistance. That's an objective short, as would be a tag of the trend line. You can have tight stops, you can have loose stops. It all depends on what you're targeting. And then, of course, if we get rejected here, that would be ideal, optimal. It's my preferred scenario. Then you got to take out through that 357-ish. I have it at 357.69. You can call it round down to 357. It's a 360-point security, so 69 cents is a fraction of a percent. We're not talking much. Okay, I'm going to wrap this one up and listen to what Powell has to say, and then and if anything big happens by the end of the day, I'll get another update out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.